Hello, and thank you for joining us today. My name is Nick Edwards, Executive Director of Agriculture and Food Commodities, S&P Global, helping clients, whether they're retailers, food procurement, food manufacturing, suppliers, traders, producers, navigate increasingly complex and volatile supply chains. Joining me today from Sao Paulo is Gabriel Tande, an analyst in our food, retail, and manufacturing team. Hi, Gabriel.
Hi, Nick.
So we're going to talk about developments across a range of commodities in South America. So where should we begin?
Why don't we talk about inflation here in Brazil and Argentina?
Perfect. Yeah. So how are things looking at the moment?
So in September, Brazil inflation was 5%, which is above what the Brazilian central bank target is.
And how about food inflation for Brazil?
So food inflation was 7% higher year over year. It is high, but has been decreasing. For example, last month, food prices declined 0.3% month over month.
Okay, so let's look at both those directions. What drove up prices initially, and why are they coming down now?
So meat prices have been a big contributor to food inflation, with consumer prices up 19% year over year, while slaughter rates and beef production have been increasing. Strong demand from our domestic market and from export demand, particularly from China, have been keeping prices up. And those prices are going to stay high for some time because we are seeing a decline in female cattle slaughter here in Brazil, which suggests that farmers are starting to rebuild their herds, which means lower production. But inflation has been decreasing due to a decline in fresh produce prices. We did not have a strong La Nina in early 2025. Instead, it was almost like a neutral condition, so we had like more favorable weather that allow us to produce production for fresh produce recover from last year and prices decline. And lastly, the US tariff on certain Brazilian products has increased the availability of certain fruits here in the domestic market. So this surplus has contributed to further price declines.
So I guess it makes sense that better weather is going to have that kind of impact on volatile fruit and vegetable prices. So is it as simple? Is it just meat that's keeping inflation high?
Well, not only meat, to be honest, sugar prices are still elevated because of the drought and wildfires we had last year. But the biggest price increase right now is coffee. Consumer prices for coffee is up 55% year over year, and coffee prices will likely remain high in the coming months too. That's because the U.S. tariff on Brazilian coffee drove global prices up. Global inventories are low due to years of reduced harvest in major producing countries, and the Brazilian Arabica production this year has decreased.
Okay, so that makes sense. So I guess we can't really talk about prices without talking about tariffs. So why
Yeah.
don't you bring us up to date on that?
Talking about the US tariff here in Brazil, some products that were supposed to be exported to the US are staying here in Brazil. Like I said, some fresh produce like fruits are staying here in Brazil, so prices are going down due to the surplus. However, with coffee, like coffee that was supposed to hit the American market, a Brazilian coffee that was supposed to hit the American market, is being diverted to Europe. So we are seeing Germany and Italy importing more Brazilian coffee, while Colombia, that was like a major exporter to Europe, is now diverting their export to the US. So unfortunately, we won't see a price relief for coffee here in Brazil due to tariffs.
Running out of time, but before we leave this, we should really look at Argentina. So I know that inflation has decreased recently, but it's reached record highs over the last few years. So what's the current situation in obviously a volatile market?
Yeah, so inflation it's in Argentina is a bit more complex compared to other South American countries. Prior to President Javier Milei government, the government in Argentina spent a lot, and to cover those expenses, they had to print more money, which pressured prices. In addition to that, the government restricted export of some agricultural products. Their goal was to reduce prices locally. However, production decreased. So we can say that that measure backfired and prices increased. And lastly, because they like restrict the amount of dollars the population could obtain through official markets back then. And so the population went to unofficial markets, and that helped further pressure prices. So when Milei took office in December 2023, inflation Argentina was 2%, was 23% higher month over month and 211% higher year over year. After introducing some policies to cut government spending and leave prices control, consumer demand fell, which helped to slow inflation a little bit. So as of September 2025, inflation was 2% month over month and 22% year over year. Regarding food inflation, the monthly inflation was 2% higher and 22% annually, so almost the same number. And one last thing I would like to add is that Milei has recently lowered export taxes on meat and grains. And US President Donald Trump also said that the US could buy more beef from Argentina. So all these things could lead to further price pressure because we could see an increase in exports and lower supplies for the Argentina market.
Okay, so it's always interesting to get the South American perspective from somebody on the ground. So really thanks for your insights, Gabriel, and be a good speech next time.
Thank you.